Welcome to the deep dive. Today, we're taking a close look at the cryptocurrency market. We've got a stack of recent news and analysis here.
Yeah, stuff from blockchain.news, The Motley Fool, Bitcoin Magazine, even CNN Business, all from, this past May.
And our goal really is to bring these different pieces together for you, the listener.
Right, to give a clearer picture of what's actually moving the crypto markets right now. We'll try to highlight the key trends, maybe make sense of where things could be headed.
Okay, let's jump right in then. One thing that kind of caught my eye across a few articles is how broader political stuff seems to be making ripples.
Yeah, not just in traditional finance, but in crypto too. It seems like even news coverage itself can have an impact.
It's interesting, isn't it, how interconnected things are?
It really is. Blockchain news pointed out something quite specific. CNN's Jake Tapper made some comments about past coverage of President Biden's cognitive state.
Which Fox News reported on.
Exactly. And that seemed to coincide with some, noticeable market movements back on May 14th.
So this media focus on political stability, it caused a reaction.
It looks like it. Blockchain news reported the S&P 500 saw, minor fluctuation, just 0.3%.
Okay.
But Bitcoin actually jumped 1.2% to $62,500.
And Ethereum.
ETH rose 1.5% to $2,450. And Binance even saw an 8% increase in BTC USD volume.
Huh. So it's like the market's reacting to more than just the usual economic data.
Precisely. That initial uptick in Bitcoin and Ethereum, well, it could suggest some investors see crypto as maybe an alternative during times of political uncertainty.
Maybe, but it wasn't all positive, was it?
No, blockchain. News also noted a bit of a different picture in tech. The Nasdaq dipped to 0.4%.
And Coinbase.
Coin stock dropped 2.1% to $210.50. So, yeah, a more divided response, really.
Right, not a uniform move across the board. And blockchain news also said these shifts can create, opportunities.
Yeah, they mentioned watching BTC and ETH for potential breakouts, looking for entry points in coin.
They even highlighted an altcoin, didn't they? SolSD.
That's right, on Kraken, up 3% to $145.20. It just shows how quickly things can adjust.
Makes you wonder about the underlying activity, What are investors actually doing?
Well, the on-chain data reported by Blockchain News might give us a clue. Bitcoin wallet inflows were up 5.3%.
Okay.
And Ethereum gas fees spiked 10%. That could mean more institutional buying, maybe, or just a surge in trading.
Right, people moving things around on the blockchain itself.
Exactly. And Blockchain News also dug into technical indicators, the stuff traders watch.
Like RSI.
Yep. Bitcoin's relative strength index, the RSI, was at 58. They noted potential support around $61,800, resistance near $63,000.
And for Ethereum?
ETH's RSI was a bit higher, 60, with resistance around $2,480. And they also flagged that 10% jump in Binance's Bitcoin volume again.
So lots of activity signals.
And if we tie this back to the start, it seems like even non-financial news, like political commentary, can subtly shift how investors feel.
That shift in psychology then ripples out.
Exactly, leading to short-term price moves and, like Blockchain News said, potential trading spots in crypto.
Okay, let's switch gears a bit. The Bitcoin halving, it's usually this huge event, right? Everyone expects fireworks. But the Motley Fool suggests maybe this last one didn't quite live up to the hype compared to the past.
Yeah, that's a fair summary of their analysis. I mean, historically, the halvings in 2012, 2016, 2020, they were followed by massive price increases.
Like really massive.
Oh, yeah. We're talking 8,000% in 2012, 277% in 2016, 762% in 2020. Huge numbers.
And 2024.
Well, the Motley Fool points out Bitcoin is up, about 56% since April 24, which is good, but just not the same dramatic impact as before.
So why the difference? What are the theories?
The Motley Fool offered a few possibilities. The general macroeconomic climate, for one.
Okay.
Uncertainty around tariffs, and maybe even the impact of those spot Bitcoin ETFs already being in the market.
So maybe some of the demand was front-run, in a way.
Could be. They also brought up an interesting point about 2020. That halving happened alongside, the COVID-19 pandemic and all the stimulus money.
Right, a very unique situation.
Which suggests maybe those external factors played a bigger role in past surges than just the supply reduction from the halving itself.
Interesting. And looking ahead to 2028, the next halving.
The Motley Fool seems to think the price impact from the halving event itself will be even smaller then.
What is that?
Well, they figure by 2028, something like 97.7% of all Bitcoin that will ever exist will already be out there in circulation.
So the reduction in new supply becomes less significant relative to the total supply.
Exactly. And what's fascinating is the shift they anticipate in what drives the price.
Less about the halving's supply mechanics.
Right. They argue that by 2028, the main driver is expected to be demand. From institutions, corporations, maybe even governments, not just the slowing rate of new coin creation.
It's like the market's maturing, focusing less on the program supply shocks and more on actual adoption and use.
That seems to be the idea. The Motley Fool also clarified something important. The halving slows down new Bitcoin creation. It doesn't cut the existing supply in half.
Which is a common misunderstanding, yeah.
A crucial distinction. The basic economics are the same, but the halving's power as the sole driver seems to be fading as the ecosystem grows up.
And speaking of that growth and adoption, we're definitely seeing more news about big players getting involved, corporations, institutions.
Absolutely. Bitcoin Magazine had quite a few stories on that. Abu Dhabi's Sovereign Wealth Fund, for instance.
What did they do?
Reportedly put a hefty $408 million into BlackRock's Bitcoin ETF.
Oh, okay.
And we saw DDC Enterprise announce a plan to build a Bitcoin reserve 5,000 BTC over 3 years.
Serious accumulation.
And Coincilium launched a Bitcoin treasury strategy, too, after raising $1.25 million. These are concrete steps.
It's not just talk anymore. And it's not just holding Bitcoin either, right?
No. Bitcoin Magazine mentioned a new show, the Bitcoin for Corporations show. That itself highlights the growing interest from businesses.
And JP Morgan made a pretty bold forecast.
They did, predicting Bitcoin will outperform gold in the second half of 2025.
Based on what?
They cited corporate buying and potential support from U.S. states as key drivers. That's a big call from a major bank.
It really is. And then there's Coinbase getting into the S&P 500.
Yeah, both Lowenstein Sandler and Coinmetrics flagged that. It's another huge milestone.
A sign of acceptance. Integration into mainstream finance.
Definitely feels that way. It signals the crypto industry is becoming, well, more established in the traditional financial world.
But not everyone's totally sold on these corporate Bitcoin plays, are they?
No. The Motley Fool had another piece raising some questions, particularly about strategy, formerly MicroStrategy.
With their enormous Bitcoin holdings.
Exactly. Close to 569,000 Bitcoin. The concern they raised is whether this heavy reliance on Bitcoin appreciation might be masking maybe a lack of innovation in their main business.
So is their success just tied too tightly to Bitcoin's price swings?
That's the potential risk the Motley Fool highlighted. It's a strategy that depends heavily on Bitcoin continuing to go up.
We're also seeing adoption in other ways, beyond just companies holding Bitcoin.
For sure. Coinmetrics noted Meta is looking into using stablecoins for creator payouts.
Interesting application.
And Anchorage Digital bought Mountain Protocol, the issuer of the USDM stablecoin. Plus, Thailand is planning to issue $150 million in digital investment tokens linked to government bonds, according to Lowenstein Sandler.
So it's diversifying. Stablecoins, tokenized assets.
Yeah, it shows the utility is expanding beyond just Bitcoin as, digital gold or a speculative bet. These other assets are finding ways into the financial system, too.
Okay, let's pivot to regulation.
Yeah.
Always a huge factor in crypto. Lowenstein Sandler had several updates here.
Yes, the regulatory scene is always moving, always impacting the space. One key thing was the SEC withdrawing its joint statement on broker-dealer custody of digital assets.
What does that signal?
Well, it suggests they're still figuring things out, reassessing how these assets should be handled and regulated. It points to an evolving landscape.
And then there was the Celsius case.
Right. The former CEO, Alex Mashinsky, sentenced to 12 years for fraud. That's a pretty stark reminder of the risks.
And the need for oversight, presumably.
Absolutely. It definitely impacts investor trust and shows there are serious consequences for fraud. Looking forward, SEC Chair Atkins apparently outlined a vision for crypto regulation and tokenization.
What's the focus there?
The emphasis seems to be on getting clear rules for issuance, custody, and trading. So a push towards more regulatory clarity down the line.
Are we seeing any actual legislative movement?
Some potential progress. Coinmetrics mentioned the Genius stablecoin bill seems to be getting some momentum again in the Senate.
Okay.
And Lowenstein Sandler reported something interesting from Zimbabwe. They've introduced a blockchain-based carbon credit registry.
Why blockchain for that?
The aim is transparency, rebuilding investor confidence in that specific market. So it's a mix enforcement actions, but also new frameworks being developed.
Right. These regulatory moves, both cracking down and building rules, they're really shaping how things will play out, aren't they?
Hugely influential. Affects institutional involvement, investor confidence, everything.
All right, let's talk market performance. How have things actually been doing? Investor Daily seemed pretty upbeat.
Yeah, they painted a fairly optimistic picture. Bitcoin surging past $100,000 in early May, trading around $103,700 by mid-month. That's a big jump year to date.
And they mentioned Global X upgrading their price target.
They did, to a pretty ambitious US $200,000 by year-end.
Wow. 200K.
Yeah.
What's driving that confidence?
They cited improving sentiment, the possibility of a, let's say, favorable Trump administration stance, and rising investment from both institutions and retail.
They mentioned ETF inflows too, right?
Yes, significant inflows. U.S. ETFs took in $2.9 billion in April alone, and Australian ETFs saw about $148 million year to date.
The reasons they gave for that $200K target were interesting. Trump's engagement.
They mentioned his engagement with the crypto community, even that dinner for Trump coin holders, and also the trend of de-dollarization globally.
And Van Eck saying Bitcoin's replaced gold.
As the asset class du jour, yeah. That's a very strong statement about its current status among some investors.
Quite a shift in perception.
It reflects the current mood. Bitcoin Magazine and Coin Metrics also reported on that big price jump in April-May from 75K up towards 106K.
What was behind that surge?
Potentially easing trade tensions played a role, according to Coin Metrics, and for Ethereum specifically, there was excitement around the Pectra hard fork upgrade.
But probably not all smooth sailing ahead, right?
Unlikely. The Motley Fool offered that reminder Bitcoin's price can still be really sensitive to things like tariff news or just general economic optimism versus fear.
So the upward trend is there, but expect bumps.
That's always the crucial point with crypto, isn't it? Sentiment can shift very quickly based on wider events.
Definitely. Okay, finally, let's touch on something CNN any. CNN Business reported the increasing involvement of political figures, specifically former President Trump, in crypto.
Yeah, that brings up some unique dynamics. CNN outlined how the Trump family's crypto involvement seems to be expanding.
Like what?
Meme coins, like Trump, a financial exchange called World Liberty Financial, even an American Bitcoin mining firm going public.
And that auction for dinner with him.
Right.
For Trump holders.
Right. That raised some questions, about potential pay-to-play scenarios.
CNN also reported that Trump Organization affiliates hold a lot of the Trump supply.
Yeah, apparently around 80%, and they earn fees from transactions. Then there was that reported $2 billion deposit from an Abu Dhabi venture fund with World Liberty Financial.
That adds another layer, doesn't it? Especially thinking about potential influence on policy or legislation.
It certainly introduces a new set of considerations when political figures have such direct financial ties to the industry.
Okay, so bringing this all together, this deep dive into May 2025, it really shows a crypto market being pulled in a lot of different directions.
Yeah, a really interesting mix. You've got political uncertainty having these kind of unexpected effects.
A rethinking of what the Bitcoin halving actually means now.
Growing institutional interest, but also some healthy skepticism about certain corporate strategies.
An evolving regulatory picture, steps forward, some steps back, enforcement actions.
Right, and these really optimistic market forecasts, but facing potential headwinds from the wider economy.
And now this overlay of political figures getting more directly involved in the space itself.
Exactly. The interplay between all these forces, politics, regulation, institutions, market sentiment, it creates this constantly shifting, often surprising environment.
It really does. So with all that in mind, here's something for you, the listener, to think about. Given how fast all this is moving, how might this increasing overlap, finance, politics, crypto, how might it actually reshape the global economic system in the years ahead? And what role could individual investors like yourself play in that changing landscape?
Definitely a lot to consider.
It is. Thanks for taking this deep dive with us today.